Daniel, thank you so much for joining us here.
Pleasure.
Jamie Dimon was in Africa a year ago, said he's, quote, quite optimistic about the future. We've heard that before, of course, but a lot has changed in the past year. What's the house view now on Africa and opportunities?
So we are very positive about Africa. So we have presence in Sub-Saharan Africa in 5 places, including now a new office in Kenya and Ivory Coast. We are upgrading our license in Nigeria. We have presence in Johannesburg and Cape Town here. We cover around 350 clients, both sovereign enterprises and private sector. So I think that this may be the time. I like what we are seeing in this country and in other countries in the region. I think that the redirection of the supply chain may be beneficial for this continent. So we will continue prudently, but invest. These are economies that South Africa is turning around, but also other economies are growing faster. So I think that there is a role for a company like us gradually and prudently increase our presence and our coverage in the region.
As you mentioned, I mean, Standard & Poor's just upgraded South Africa. Do you see further upgrades coming?
Well, it all will depend. I think that this government have done very good things in terms of the reforms on the energy and power sector, the opening of the transportation system and reform on that, the water reform that is coming. So hopefully all these turn the dynamics of growth and move South Africa to a level of growth that is more in line with the potential of 3%, 4%, 5% rather than a 1%. And I know that tariffs have been a bit of a headwind, but overall, after 10 years of the economy really stagnate, really having even having negative productivity. So the country looks to have turned the corner, and the potential is there.
There are some complaints in parts of the market that Africa still pays a prejudice premium when the countries issue sovereign bonds. I mean, I think Africa Finance Corp, the development bank, estimates that the continent spends as much as $75 billion a year on extra borrowing costs. Where do you stand in that debate?
Well, so markets are markets, and markets are relatively efficient at pricing the risk. So if, unfortunately, when you look at the dynamics in the continent, that it may improve, but at the moment, so that spread may be justified. So I think that over time, as the region improves, if the governance improves, the corruption hopefully goes down, there are structural reforms, all these things take place, so probably spreads will tighten, and that will be in line with better growth and better future for the region. But at the moment, it is what it is.
In terms of sectors, I mean, which sectors look interesting to you? Is it energy? Is it infrastructure, fintech, consumer? Where would you put your money?
Well, all of the above. Clearly, energy is transforming and requires a lot of capital to continue to do so. Infrastructure, transport is another, ports, airports, all those areas need investment, and it will create opportunity. Clearly, this continent has roughly 1.5 billion people growing very, very fast. So the consumer industry should be a thriving industry for the continent. So all across, hopefully all this potential gets gradually materialized, and the size of the business that we do goes more in line with the size of the continent, because at the moment it's relatively small, but growing.
We put out a story the other day highlighting that Africa needs to create 1 billion jobs by the end of the century to fulfill its potential. What do governments have to do, and what are they not doing at the moment? What are companies doing or not doing to actually deliver on that?
Well, it's about what we have talked about So this country, 40+% unemployment, big informal economy, 60% youth unemployment. So therefore, that is kind of the base for higher level of crimes and all that. So as you continue reforming these countries, so then the creation of jobs will be necessary, and they will happen. The size of the informal economy will be smaller as labor laws and other reforms take place. So likewise, you do all that, so everything improves. But they have to really do it in order for that to happen. You cannot continue with these numbers, 60s and 40s in unemployment and things like that. So I think that the government is doing all the right things in this country, and hopefully that continues and get deeper, so then you have a better situation for the people in the country.
Relations between Washington and Africa aren't at the best at the moment. You have accusations of genocide here. You have the Trump administration complaining about Nigeria not doing enough for Christians. Do you think this is sort of a short-term blip that's going to normalize at some point, or is there something fundamentally at risk in the current sort of frosty environment?
I think that all the situation with tariffs and relation between the U.S. and many countries or regions around the world, at some point is going to stabilize. Tariffs will be set at a certain level, trade agreements will be in place, so therefore it's likely to improve rather than deteriorate, in my view.
You followed, obviously, and run businesses in emerging markets for a very long time. I'd like to zoom out a little bit and look beyond Africa. What's the state of emerging markets overall?
Well, I think that the fundamentals are good. These countries are growing, lower interest rates are helpful, the weaker dollar, some way or the other, helps too. Clearly, when you look at markets, emerging markets underperform for many, many years. This year is probably the best performing, including this country, that the equity market has gone up 40% and in dollar terms around 50 or more. So I think that they are doing fine, and including hopefully my country.
You took my next question.
Okay.
You grew up in Argentina. Obviously, there was a little bit of a wobble in the markets the other day. But generally, do you think Milei is on the right track?
So when he came to power, so the country was heading to a really meltdown, hyperinflation, all these type of bad things. And Argentina, from being probably the fifth or sixth biggest nation in the world, after the Second World War, it's been deteriorating for the good part of 80 to 100 years. So he, on the economic front, he did all the right things. So cut the deficit, lower inflation, with a lot of pain from the population, but hopefully creating the base for growth. Now, he has done very well in the midterm election, but he doesn't have majority. So the challenge from here is more than the economic front, is the political front. Can he create the right alliances to do the structural reforms that they are needed for the country to grow faster, which is essentially labor reform, tax reform. If that happens, I think that there is a lot of potential, a lot of investment wanted to come to Argentina, particularly in mining and energy, agricultural sector, so agro-industry. So I think that the potential is there. And if this model is successful, then you could see the possibilities of the rest of the region moving in a different place, in a better place. Clearly, he has aligned himself with the United States, and hopefully the rest of the region does it too. Because if you think about the tension between China and the United States, so it should be very beneficial for Latin America, for Mexico and the rest of the country. So hopefully that happens.
When you look beyond 25 and into 2026, you seem to be quite optimistic. I mean, Jamie Dimon mentioned cockroaches the other day, which was sort of a quote that went viral. Do you see cockroaches around here?
I think the comment was taken a bit out of context, in my view. So it may be other cases of fraud, maybe. We don't know. Possible. Clearly, in the auto financing sector, subprime financing, with used car prices after the COVID crisis being so high, if you are lending to low incomes, you're going to have some issues. And in these cases, they are some related to fraud. What we are not seeing is a deterioration between what we were expecting in the credit cycle in any of the portfolios. So I think that credit remains solid from credit cards in the US all the way to big corporates. But we will see how it plays and continues once the economy. I don't think that the economy will go into recession. It's likely to slow down, and the credit cycle will continue to normalize. But I don't think that in the credit cycle we see a deterioration beyond what we were expecting.
If the economy slows down, where do you stand on the interest rate debate in America at the moment? Do you think the Fed is going to cut again in December or hold off?
I think that it may be some inflation is being quite resilient. Growth is slowing down, but it's still this quarter. I think that we should discount the numbers wherever they can because of the shutdown. That it will recover. Whatever it is, it will recover in the next quarter, in the first quarter of next year. So we do see some deceleration. We do see some reduction in consumption, but it's still for healthy levels. So I think that the economy may grow less next year, but most likely it will avoid recession. Tariffs, they haven't had the full impact, but some will have a further impact next year, but also some will be compensated by the fiscal expansion. So I am relatively positive on what we are seeing. Having said that, markets are pricing a very, very benign scenario and quite a bit more. So that I don't know. There may be issues or not, but the S&P at 6,700 or so, 23 times is quite healthy, to say the least.
You're not giving us a new S&P target.
Well, whoever was giving target missed it all, so no. But I think that from here, you would have saw that the upside is relatively limited.
Obviously, no on-stage interview these days can't include AI. So here's the AI question. Where do you stand on the continuum of hype, bubble, and it's going to solve everything?
Well, the technology is real, and we are, even though we've been dealing with traditional AI for the last 10 years, we are now working in large language models, and we deploy that to almost every employee that we have. We are using different forms of this to improve productivity across operations, technology, detecting fraud, surveillance, credit decisioning, improving client experience. It's all over the place, but it's still at a very early stage. So large language models that are still not having the impact that they should have, and we're still very, very early in the agentic journey. Clearly, this will have an impact in the labor market. Some jobs will be created and some jobs will be eliminated. But I think that one thing that ones want to keep an eye on is how much capacity is being created, and how all these companies, how much revenues they are going to get to compensate, to pay for that capacity. Is likely, I don't know the probabilities, but it's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
Now, you stepped down from your day-to-day job in June. You have a farewell tour similar to The Who till the end of next year. Obviously, you're far too young to retire, so what's next for Daniel Pinto?
I've been in the company for 43 years, and it was an amazing journey in really working with Jamie in transforming the company and creating the success, be a contributor to the success of the company that we have. From here, clearly, I don't want any other operating jobs. I already in the board of Johnson & Johnson, which I think that is a fascinating industry. And I want to continue learn about other industries, being on top of innovation, understanding what could be the impact of AI in different sectors and in society. So I want to take a bit of slower pace, but continue to learn and explore other sectors, other avenues.
And golf will play a part as well?
I would play a bit of golf, but not all that.
Right. So. Okay. Well, our clock here says we're out of time, so thank you so much.
Thank you.
Thank you very much.